Hey, it's your girl Reese, and you're tuned into In Your Business. And today's guest is none other than my girl, Miss Nadine. What's up, girl?
Nothing much, hanging here with you.
As always, you my ride or die, right? So today, well, basically this show is about getting into, I guess, businesses that they have. Because, you know, I am all about small business and, you know, promoting and all of that. So I just lost my train of thought, but yes, you are the CEO of
CEO Legacy
I love
Group,
the name.
LLC.
I love the name. Top name, CEO Legacy.
You know,
Yes.
I have to leave a legacy for my beloved son. So
Of course,
that's how
of course.
it was conceptualized. So,
Yep. And I
yeah.
know that under the CEO Legacy, you have numerous businesses because you are Jamaican. So it
10 jobs is the minimum.
only 10.
if you're
only
a
10,
Jamaican.
if you're 10 jobs is the minimum, right? You have to go add on one more. 11.
Be a little extraordinary.
Be the extraordinary, yes. So, with all your businesses, which one? I know you have different, as I said, but which one are we going to tap in today? Because the show is not long enough to cover all of them. We would need a Netflix series,
Right?
So,
Okay.
which one are we going to tap in today?
So we're gonna focus on insurance, life insurance, health insurance. I do Medicare. I do supplemental benefits, which my main focus is on that right now. Yeah.
And I know
Let's
you
talk
are a stickler
insurance.
when it comes to insurance.
It's
We talk about it
extremely
all the time.
important.
And tell our audience why it is important, because there's a lot of people out there that think that insurance is just a waste of money, that when the person, when they die, whoever is left will take care of it, you know, of the expenses and everything. So tell us why it's important for us to have insurance.
Because, firstly, statistics have shown that 100% of us will die. Google it. So, with that being said, this is something we need to take care of, and it should not be somebody else's responsibility. You understand? So everybody should take care of that, so that in the event that you die, your loved one would not cry 2 times, as they would put it, where they have lost a loved one and they're in distress, but they're also in financial distress. And let's not forget that a financial disaster may result, because you don't want to exhaust your savings helping to pay
right.
for somebody else's funeral. And there's a lot of time before the funeral. There might be medical bills and all of that stuff.
Right.
So that's something very important, and you should take care of it. And that's why I'm so passionate about it.
And there's a
because
lot
I see it happening all the time, and it's like we're not learning. We're just not learning.
And there's a lot of misconception that you have to have a big policy to leave and take out maybe 500,000 or $1 million, and that's not the case. You have different types of insurance for, let's say, for instance, and you corrected me on this because I thought a burial insurance is different from a funeral home
Yeah, so
insurance,
you have
right?
different
So you can take out a
types.
policy just to bury the person, to bury yourself, right?
Yeah, so in essence, that's what people call burial insurance. So burial insurance is really another way to name or to label a small policy.
Right.
Because the intent behind that insurance is for your burial.
Right, so
which
that's
would
what
be
I'm
like
saying.
$15,000-$20,000.
Right.
And then we were talking about a burial plan,
Right.
where the person will pay for a package.
Right.
So they pick their flowers, their funeral home, their, those little things, the plot, all of that stuff. So I was explaining to you that with the funeral plan packages, it's different from a life insurance, because as long as the life insurance policy is in good standing, if you pay 1 month and you die, the company has to pay the entire
The face value.
coverage.
So you're saying,
Correct.
if I take out $100,000 and I pay for 2 months
And you die,
and I die,
we're
and
gonna have to
everything
pay
is good.
$100,000.
Okay.
I mean, assuming
Assume
you
that
didn't lie on the application
right,
or anything
right.
like that, right? And assuming it's not a guaranteed issue policy, because a guaranteed issue policy has that 2-year waiting period. And that's where a lot of confusion comes in,
Right.
because people think that, oh, there's a 2-year waiting period for every policy. No, it's not well, by law, when you have a policy, if you die before 2 years of having that policy, the insurance company reserves the right to check your medical records from 5 years back.
Right.
So that's where the confusion
so
comes
you
in.
may say that you're in. If
Yes, you might lie,
I'd say yeah, you're good in good condition,
but you're not.
but you're not, because they're
But
going to
you
do
just
the
went to the
investigation.
doctor and
Right.
really the doctor wrote that, oh, there's a lump there
Yes.
and there might be cancer, but you didn't disclose that to me when I was writing the application. The application goes to the head office, they process it, and they didn't see that.
Right.
Because maybe the doctor, whatever wasn't submitted or updated in the system, they didn't see that. But if you die in a couple months and they're looking back, they might see that.
Right.
So that's where that 2-year.
Because they still have to do the investigation. They're not just going to pay it out like.
Correct.
And the reason why I brought it up is because a lot of people may think that, oh, I have to buy life insurance to bury me, but no, you do have
Funeral
other plans and whatever.
So we do have a funeral plan, and that's not a life insurance.
It's just a plan
It's
to
a
bury
funeral
expense.
a funeral expense, funeral home plan. So it pays everything or most of the stuff at the funeral home.
At the funeral home.
So that's a little different from the burial plan, because with the burial plan,
you have more.
It's one sum of money, and if you die in a month or two, more than likely, depending on the contract, your family still have to pay the entire amount.
Okay.
See the difference?
Yeah.
So, and that is why I have to do a consultation with people, because sometimes you don't know what you want.
It's
or
true.
Yeah,
You're
because
confused.
it's a lot.
You're
It's a lot.
confused. Like, I know when I came to you and told you that I have insurance through the job. Right?
Let's talk about that.
The insurance through the job. You remember me? You have comments that, okay, how? So talk about that, because a lot of us say, oh, we have insurance in the job.
Yes.
We'll be fine.
Exactly. Okay, so I do group benefits also. That's where I educate the employees, and we garner businesses and we do the employee insurance. However, not all employee benefits are created equal. Now, maybe let me preface that by saying you have term life insurance, and then you have the permanent insurance. So what you need to know is that job insurance a term or is it a permanent? When you retire, will you leave with that insurance? And if you are allowed to leave with that insurance, will it increase to such an exorbitant rate that you really cannot afford it?
Okay,
right?
but not only if you retire, what if you leave the job? I mean, you get fired.
That's another thing.
Right.
So what if you get fired or you quit?
Right.
Damn it. You quit.
Why you can't quit, right? Why have you get fired?
Right? So if you quit, is it portable? We call it portable, because there are some group coverages that it's portable, meaning you can go with it and the price doesn't increase, while there are other insurance where when you leave, the company owns your policy technically,
right,
and they're paying for it, so you're not leaving with that. You quit, you're not getting your benefits.
But I think the one that I have says accidental.
And then we have the accident policy.
The accidental policy.
So an accidental death policy means that it will only pay if you die from an accident. So if you die from an illness or cancer,
it's not going to cover it.
It's not going to pay out. And those are usually very cheap.
Right.
It's very cheap.
Right.
You know?
Okay.
So, and then, of course, the term is cheaper than the permanent policy. And then we have the universal life, which is technically, I'm not going to say a combination. I'm going to say it's flexible. You can make it work as something permanent, or you can make it work as a term. It usually builds you some cash value, and the cash value works a little different from the whole life cash value, where, well, the whole life is really a cash value. You take the cash value, it's going to decrease the face amount. While with the universal, most of the time, the cash value is separate from the face amount. Make sense?
Yeah.
So in a way, it's like you're saving some money and making some, and having your coverage with the universal plan. And we call that like the Superman policy. If you qualify for that, that's the best one to have. Most of the policies nowadays also have living benefits.
I was just going to ask you about that too.
And then not all living benefits are created equal. And that's why it's so confusing, because some company will say, okay, you have to be able to not do 3 out of the 6 activities of daily living for it to qualify. So the qualification process is a little different for each company.
So before, stick a pin. So for those who don't know what living benefits are, can you explain to them?
That's like walking, administering medication.
So when does that kick in, like the living benefits kick in?
It kicks in immediately, but depending on how long you have the policy and the severity of the issue, that's how much you're gonna get.
Give me an example.
Let's say you have, all right, let me give you a real example. I have a client, she has breast cancer. She had a policy for the past 2 years. It's $250,000. Right? She's now diagnosed with breast cancer. So the company is going to look at everything and they make an offer. They're like, okay, we're going to give her $50,000. There's going to be some fees, of course, right? And we call that accelerate. So we accelerate the benefit. You're going to get $50,000 cash now. We're going to take some fees and all kind of stuff. And $100,000 is left on the policy, and of course we'll reduce the monthly payment to match that $100 that is left, right?
Okay.
Right. So, and it's going to be optional whether you want to take it or if you don't want to take it. So if she had it for 10 years, maybe she would get $200,000 instead of $50,000. Depending on the stage of breast cancer, it's stage 1. If it were stage 3 cancer, you would get more money. Make sense?
Right. So they pay you out based
depending
on your
the time and the
time
severity.
and the severity. Okay. That's good to know. So then she can use that for anything. It's like
anything you want. So you know, we were talking earlier that you have to care about your family to have insurance, because frankly, most people are like, oh, hey, I'm not going to leave all this money for my wife for her to have a new man when I die. Or,
and that is just like,
or when I die, they can do whatever they want to do with my body. Right. So there's that what's in it for me mentality. So the living benefits is a good little addition, because now you know you're protecting yourself. One in 3, according to American Cancer Society, 1 in 3 people will have cancer. You know, they're expected to be diagnosed for cancer in their lifetime.
It's like the common cold now, as we were saying, like every other person has cancer.
1.9, approximately 1.9 million people will have cancer this year, or expected to have cancer this year, right? So cancer is real.
Oh.
So if you have a policy and you know that, hey, if I am diagnosed with cancer, I can get a part of that money, it gives you a better sense of urgency to get a policy in place.
And it is a specific cancer policy.
Yes,
Okay.
we do have supplemental benefits, we call them. So they are more leaning on the health side. They're health supplements. Let me give you an example. Let's say you have your major medical, like a ACA policy. You're going to have your out-of-pocket expenses. You're going to have a maximum out-of-pocket that you need to pay. If you're, all right, so with a cancer policy or an accident policy, if you're in the hospital, right, and you're what you regular people who do regular job stuff, PTO.
You're so stupid. Yes.
Messing with you.
Regular people.
All right. Regular jobs. Okay, so PTO, your PTO is up. You're still in the hospital. Would that mean that you're not gonna get paid?
Yeah, if you use up all
For
your
those
time,
days. All
your
right.
sick time, your PTO time, and if you don't have short-term disability, that won't kick in or anything. So,
Or if that's exhausted.
yeah.
And bear in mind, short-term, long-term disability is 60% of your salary.
Yes, yeah.
And we all know that our salary can't cover a bill in the first place.
In the first place, so it came out at 60%.
Right?
Oh my gosh.
Okay.
Yes.
So, okay, fine. So I'm trying to paint a picture. If you're out of PTO, right, and you're still in the hospital, how will your bills be paid? Even if you're major let's say you reach your maximum out of pocket, you pay that off, thank God. How will your mortgage be paid? How will your light bill be paid?
The car payment,
how will you
insurance,
maintain your standard of living?
Yeah.
So that's where the supplemental benefits come
Kicks
in.
in.
Where a cancer policy, if you're in the hospital because of that, then you're gonna get some money every day you're in the hospital. Or if you have an accident, for the accident policy, you're gonna get paid every day you're in the hospital. You're gonna get paid if it's a broken leg. You're gonna get a lump sum check.
Right.
You know.
So it's kind of like the other program with the duck on there. You know,
kind of like that.
Like
yes.
that.
Except that ours is much lower,
Right.
right? Because we don't spend millions of dollars on advertisement.
Right,
Let's
right.
face it. So it's going to be at an affordable rate. And most importantly, we have a cancer policy and we have an accident policy that will actually pay you all your money back after a certain period of time. If you made some claims and it's not equal or more than what you paid in for premiums, you're gonna get all that money back. So it's a win-win situation.
Yeah.
You have nothing to lose there. I mean, you basically force yourself to save the money.
We just have to continue to educate people because
people don't know.
Yeah, and my biggest thing is, and me and you talk about it all the time, GoFunding.
Oh God, not sexy.
Not hot.
Not.
Listen,
and it's unfair.
It's unfair, and I will do a GoFund for medical. If somebody,
reason,
whatever. I don't have a problem because and the worst thing is when you see people out there talking about they're driving this car or they're in the clubs and they're popping bottles or they're wearing Gucci and all of that, and then when they pass, you see a GoFund thing. Oh, what?
Like seriously? So I must use my light bill to pay for your
and
funeral?
It just don't make any.
It doesn't.
Listen, when you're
really
young,
doesn't.
and I've been there. When I was young, you think all kind of crazy. When you think you're thinking of being flashy, you're not thinking about life insurance. But when you get older, and you really like it. It's really necessary to have Gucci. Is it necessary if you can afford it? Right?
Yeah.
But I think that it's the GoFund thing, and I tell anybody, if anybody ever see it when I pass and they see no GoFund crap on,
I won't be contributing, my friend.
Please. And I'm saying it here on tape. I don't want nobody put up no GoFund. I will sacrifice my Starbucks coffee because I love me some Starbucks, and I gotta cut down on that to pay if I have to pay for a life insurance.
We should.
Yeah,
we really should.
We need to really take into consideration of the people that we're leaving behind. And I think about my kids all the time, like, they're going to be a mess already.
Exactly. So you can imagine you're there worrying about how are we going to pay for this. And it's embarrassing,
It is.
It is.
So, I mean, and that's why I brought up the burial, because a lot of people may think that, we have to have this big exorbitant policy when you don't have to.
You can have a
small policy that can cover final expense, and that's it.
And you can also have that funeral home plan that I was speaking of. Mm-hmm. So the funeral home plan holds up to 7 people.
Right.
And it's only like $70, around $70 a month for 7 people.
Before we close the show, I was going to tell you, you beat me to it. Mm-hmm. Talk about that plan. The one that has a 7, because I have that plan.
Yes. So it holds 7 people, and what's nice about it is you can actually add a few people from Jamaica on it.
Which I did, yes.
Yes.
That's a good thing about it.
It works in Jamaica too, and a few other countries. So it's a funeral plan. It's not life insurance, but what it does is it facilitates the person who, I don't want to say doesn't qualify for life insurance, because as long as you're breathing, there's a life insurance. It's just that it's going to be expensive. Mm-hmm. So, for example, let's say you have HIV. You can still get a life insurance policy, but it's going to be a guaranteed issue, meaning there will be a 2-year waiting period, and it's going to be very expensive. So, an option would be to do that, because that would be $10 a month, basically, to get the funeral home plan, where the company will negotiate with a funeral home for you and pay the funeral home, so the family doesn't have to worry about that.
So the only thing they would have to worry about is the plot.
If they're not cremated.
If they're not being cremated.
I'm a strong proponent of cremation.
We just had this conversation. So now, with that conversation that we had, and let me tell you, me and my mom had it, and I was swayed, but the conversation that we just had kind of makes some points in hit that made me think.
Yeah, because it's just a dead body that is going to rot. I'm sorry, but it is what it is. Like, we have to be practical with our money. It's time we become practical, especially people with a certain socioeconomic background. We don't have, it's like, you see how everything is expensive now?
Especially if you have kids, young kids,
And I was telling you about the lady that the client I had, who had a $40,000 policy. She was 38. Her husband was 38. Her husband died. They have 3 young kids, and she spent the entire $40,000
on the funeral.
I think she got a horse and carriage. Like, I was pissed. It wasn't my money, and I was pissed. Like, why would you do that? And then a month after, she had no money to pay the rent or anything. Because it's emotional. It's gonna be emotional. You're gonna go to that funeral home, and they're gonna take you. And that brings me to another point. Never tell a funeral home
how much
is on your policy. Never sign over your policy to a funeral home.
You can sign over your policy to
us? Yes, it's called, you can assign it to them, and then they would call it insurance
so when they
company.
see all that money,
they basically sign over all your check. They're going to exhaust everything. You see what I'm saying? So don't let them know. I mean, if you don't have to even let them know that you have a policy.
Right.
You don't let them know, because then suddenly the cost of things went down.
And I think too, if a person can afford it too, they could get regular insurance that will, especially if you have children, to leave. You're not going to leave $1 million or whatever,
But leave a legacy if
leave
you
a
can.
start
Yeah.
for them, and you can put stipulations on that on it too, right? As far as
Yeah, we can talk about trust.
Right,
We can talk about because that's very common nowadays.
you can't use the money
a lot
until
of
you
my
reach
clients,
a certain. Yeah. Because
set
with
up
these young
trust.
kids, you don't want them to, blow the money like that. You want it to be
because easy come, easy go.
Yeah. Nice. Okay.
Yeah, but it's nice. It would be nice if we can leave something for the next generation. That's what the Bible says, right?
Yeah.
Yeah. But you work and you leave for generations and generations to come, and that's how you pull yourself from out of that generational curse of poverty.
Yeah.
My God.
Give a start.
Yeah.
I know we could sit here and talk forever, because this is your thing.
The only thing missing was a glass of mascara.
Oh Lord! And then that.
Yeah, we could
But
talk about
definitely
it,
we're gonna come back and talk about a different, like the will, the trust, and different another part of your business.
There's a lot to it. There's a lot.
You should have a training, like a workshop, to educate people about that.
I've been thinking about
you should do that, because a lot of us don't know the ins and outs. We just, as I said, we don't know.
It's needed.
Yeah,
it's needed.
So if anyone would like to get in touch with you, to get some information, to get a policy, she's the best. She's my insurance lady.
Yes, you can go
and she's caring. She's not in it for commission.
I won't
she's very
what you
passionate
don't
about
need.
it.
You can go to the ceolegacy.com, or you can call me at, leave a message. Leave a message at 786-488-9556. And before we go, I want to say I do group insurance, which is extremely important, because if you have a business and it's at least 3 people in the business, I can give you group rates.
Okay.
And that's great for employee retention. If people getting benefits, they're going to stay with you.
Yes. So the minimum is 3.
Minimum 3 people have to sign up in the group for it to be designated as a group. I mean, of course, I can do it individually, but it costs a little more. So group rates are always better. And most of these products are portable. Okay. Right, so you can quit whenever you want to.
Okay.
Yeah.
Are you on social media?
Nadine Smith Johnson on Instagram.
So it's at Nadine Smith Johnson.
Yeah.
Please put at.
At Nadine Smith Johnson on Instagram, and is it Nadine Smith Johnson on Facebook?
We don't know.
Yeah, Nadine Smith Johnson on Facebook.
All right, thank you so much.
Or Nadine at the ceolegacy.com.
Thank you so much for being a guest on my show.
You're most welcome. We could talk about
We could talk forever. And thank you guys for joining me, Reese, on my In Your Business, and catch us next time. Bye guys.
Thank you.